What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see a lot of volatility because we're starting to see a lot of sector rotation. That's completely normal to be expected going into quadruple witching, and more often than not it's going to present a buying opportunity. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so jumping over to SPY, we can see we were down 0.88% today and the price action did close back below the 5 EMA. Now if you look at SPY's price action, and we are going to do this in tonight's episode, you can see that a lot of the downward pressure was actually coming from the tech sector. Remember, the majority of the S&P 500 is going to be the tech sector, so when the tech sector is absolutely getting routed, it is going to put a lot of downward pressure on SPY. However, if you look at the stock market as a whole, you could clearly see that today was all about sector rotation, and sector rotation is not a bearish event. When money is leaving the stock market and going somewhere else like the bond market, that is going to be bearish. If money is selling the tech sector to buy the other sectors, that is just temporary volatility and it is not a bearish event. If anything, it's giving you a wide open buying opportunity if you miss these recent dips. So if you chase SPY up here because you saw that breakout, you absolutely got whipsawed and you're getting absolutely destroyed by this market, and the market just going to chew you up and spit you out. Make sure your trade plan does not involve chasing, because if you're constantly trying to adapt to every move after you see it, you're always going to be one step behind and this market is just going to obliterate you. The volatility is called a whipsaw, which means you're eventually going to get worn out by the market because you keep switching your positions. I can see it in the put call ratios that a lot of people sold their puts and instantly started buying calls on today's breakout, so I'm not surprised in the slightest to see the market causing the most pain possible and destroying the people that are trying to chase this move. Now, when you see these volatile sector rotations, you have to stay objective, and what you can currently see in SPY is still a very strong bull trend and price action still well above critical support. I can't tell you how many times we stay on the right side of the trade because we simply just stay objective. Until price action starts slicing below 464 and 462, there's no reason to believe this is not still a strong bull market. If you take out all of the volatility and you just start drawing a straight line all the way up to 477, this is what you would expect if the market were rational and had no volatility and had no emotional swings. We know that's not the case, so the ride up to 477 is going to look a lot more like what we're currently seeing, and it's going to continue to chop around, but eventually we know we are trending higher. How do we know we're trending higher? Because we're in the full bull trend. If we have the full bull trend, the bias is still in the upward direction and the price action is more than likely going to continue to trend higher. If we lose the bull trend, obviously that is a possibility, then we don't want to just assume we're going to continue to trend higher. But as long as we have the bull trend, we want to go ahead and stay objective and stay bullish in this bull market, and we know time and time again we have stayed objective and we've been on the right side of the trade, and we did successfully call 2 of the last 2 bear traps. So get a lot more defensive as SPY starts breaking down below 462 and stay bullish above 464. It's that simple. Don't overthink it. Follow the price action and trend and you'll stay on the right side of the trade. So right now the bullish breakout will be a close back above 470 and our price target still up there at 477. As long as we have this bull trend, the price target remains at 477. We already had the 2 confirmation breakouts above 470, so the price action is confirming that we are going to see the Santa Claus Rally as long as we maintain this bull trend, which we're currently doing. Remember, if we start breaking below critical support at any point, you need to watch this 50 EMA at 459, and the bear scenario would be on a break back below 450. I don't even really think we need to go into the bear scenario in too much detail. As long as we have the bull trend, we're going to stay bullish and the price target will be up there at 477. Jumping over to the NASDAQ 100 triple Qs, you can start to see where a lot of that volatility and a lot of that sector rotation was coming in. Remember, the triple Qs represents the technology sector first and foremost, and we saw the triple Qs getting absolutely routed today, going down 2.57% and closing just below our 50 EMA, which is right around 387. So when you look at this price action, you can clearly see this makes a lot of sense because the triple Qs did not have the full bull trend. Remember, I told you it was more than likely the triple Qs are lagging behind the rest of the market and they're going to eventually catch up. So right now, if you're staying objective and you're looking at the stock market as a whole, you can't really expect to see the triple Qs going into a bear market when the rest of the stock market like the S&P 500 and the Dow Jones are currently in a full bull trend. If you choose to believe the NASDAQ 100 is going to continue to tank from here, that's your opinion and you can do whatever you want, but I don't think that's staying objective. So right now we know the last low on the triple Qs was at 383 and we're currently forming a higher low for all that we know if we're looking at current price action. So as long as the triple Qs is hanging around about 387 and not breaking down and closing below 383, there's still the potential the triple Qs are just lagging behind and they're going to get their bull trend at a later date. So right now, watch critical support levels right around this 387 level and right around 383. If we start closing below 383, it's going to be very difficult to stay bullish on the triple Qs because now we're going to start forming a lower low. But as long as we're above 383, it's more than likely still a higher low, and we're following the price action day by day. If we start breaking below 383, you're looking for support right around 379 and 374. Things will get out of control if we continue to break down because we still have that gap down there at 360. Remember, I'm not anticipating a bear market in the triple Qs. I think it's just lagging behind and it's going to be in the bull market next. To the upside, we need to see a breakout back above 394 and eventually break out of this resistance trendline right around 397. On a breakout back above 397, it will look like we're getting the bull trend back and we should start to see those new all-time highs by the end of the year. So watch that critical support level at 387 and 383 and the critical resistance at 394 and 397. Jumping over to the Dow Jones, you can also see this was mostly sector rotation. The Dow Jones basically went absolutely nowhere today, only going down 0.1%. We still have the bull trend and we still have the price action above all the moving averages, so the Dow Jones is still looking very strong. This is because we saw a lot of money flowing into financials and industrials, which benefits the Dow Jones, and we saw a lot of that money that was leaving technology going into these other sectors. So when you look at the stock market as a whole, you see a bullish Dow Jones and a bullish S&P 500, and the S&P 500 was only taking a beating because we were seeing selling in the tech sector. So if you look at the market as a whole, it's really hard to look at these charts and be bearish. The Dow Jones is holding the breakout above 359, which means the next price target is up there at the previous all-time high at 365. So critical support levels on the Dow will be 359, 356, 355 and 354. So there is a ton of support on the Dow Jones that's only $1 apart. On a breakout back above 365, you're looking for the brand new all-time high price target around 372. On the Russell 2000, we were down just over 2% today, and we're back to that extremely critical support level right around 213. Remember, on the Russell 2000, we already know it's going into a bear market because the price action yesterday confirmed it. So we're still expecting to see a counter trend rally from here, which should go up to at least 225 or the gap close at 228. Now, right now, if we continue to close below 213, there's still the possibility we go down to these next support levels at 207 and 205. So don't rule out the possibility we still have more downside to go before we start to see this counter trend rally. The counter trend rally will need to break out above 220, and then we should have a strong resistance right around that 50 EMA at 225. If we can break back above 225, then we're looking for the resistance right around the gap close at 228 and our resistance trend line at 232. If at any point the Russell 2000 starts closing above 232 and or 234, it'll instantly start looking more bullish. But right now, we know it's in a full bear trend with bearish price action, so we want to give all of the benefit of the doubt to the bears, and we want to continue to look for opportunities to short the Russell 2000 at any of these resistance levels. Remember, the trend is your friend and the Russell 2000 is in a strong bear trend, so don't be getting overly bullish on it until we can see that decisive breakout above critical resistance. On the Arkk ETF, we were down 3.73% today, and it's very similar to the analysis in the Russell 2000. We have a very strong bear trend, so there's no reason to get overly bullish. We would need to see a decisive breakout all the way back above 107 and closing back above the 50 EMA at 108. Until we see bullish price action, there's no reason to get bullish because we have the strong bear trend and bearish price action. Watch that critical support right around $90 because if it breaks down, we could see Arkk going down to 85 or 81. The first sign of bullish price action will be a breakout back above this resistance trend line, which means Arkk needs to break out and close above about 97 to 98. Until you see bullish price action and a bullish trend developing, don't get bullish because we could still be going much lower. On the VIX, we were up 6.42% today, and we see the VIX closing back above 20, so we're definitely seeing this whipsaw playing out. Remember, we're bullish below VIX of 20, cautious above VIX 20, and getting a lot more defensive about a full-blown correction above VIX 25 to 26. So right now, the VIX is whipsawing the people that are chasing in both directions, just closing above 20 and below 20 and continuing to see that trend. Eventually, the full bull trend will come through, and we will see the VIX getting crushed back down below 20 and closing below 18. That's more than likely going to happen during the Santa Claus Rally, so we still need to get through quad witching, and then we could see the VIX starting to get crushed yet again. If the VIX doesn't get crushed and continues to trend higher, instantly get a lot more defensive and start being a lot more cautious. On Bitcoin, we're currently down around 1.64%, and we see Bitcoin still hanging around this support zone right around 46,000 to 48,000. Remember, our strong support level right now is 44,000 and 42,000, and below 42,000 we could be going back down to 39,000. The bullish breakout will be back above about 52 to 53,000, and the bullish close will be back above the 50 EMA, which is right around 54,000. Remember that Bitcoin has the full bear trend, and we're currently testing very critical support levels, so there's no reason to get overly bullish until we can get back over that 50 EMA and start to show higher highs and higher lows. It does look like we could have put in the bottom, but it's way too soon to call this a bottom until we see the decisive bullish breakout. So watch that critical support level right around 46,000 and the bullish breakout above 53 to 54,000. On Amazon stock, we were down 2.56% today, and we continue to see more whipsaws. We were back above the 50 EMA yesterday, and now we're back below 3,400, so you still need to remain cautious. Remember, below the 50 EMA, which is right around 3,450, you need to stay cautious because we're still forming lower highs and lower lows. It looks like at this point we could see a retest of 3311, so if we get a bounce off of there, it could be a potential double bottom. Otherwise, we're more than likely going to lose that support level and come back down to about 3245 or 3185. If we can get back above resistance at 3455, you're looking for strong resistance at 3500 and the resistance breakout level at 3550. Above that, we could still see prices in the 3700s, but we won't know that until we see the bullish price action breakout. On Tesla stock, we were down just over 5% today, and we did close below our support trend line, so it looks like we're very likely going to see that full gap close tomorrow right around 909. Remember, if we close the gap and we lose support at 900, it's still possible we continue to trend lower and close the gap at 843. So right now, there's really no reason to be bullish on Tesla stock because we're so close to closing the gaps and we can clearly see the bears have full control. Remember, I told you we need to get back over 1,000 to start scaring away the bears, and we got rejected right there at that 50 EMA, which is just a few dollars below the price target at $1,000. So Tesla is behaving very technically sound. You just need to identify that the bears have full control. So look for that strong support right around 909 to 900, because if we lose that, we're more than likely going to 843. If we can break back above 1,000, you could start getting more bullish, but you'll still have strong resistance around 1057 and our resistance level right around 1145. On Apple stock, we were down 3.93% today, so we definitely see some selling in Apple stock on increasing volume, but we still have such a strong bull trend that there's no way you can say that Apple stock is going to come crashing down from here. We still have support at 170 and the gap close at 168, and as you can tell, our 20 simple moving average is also going to be in that support zone. If at any point we start to see Apple closing below the 20 simple moving average, it's more than likely we're coming back down into the low 160s, so watch that strong support level right around 167 to 168. Now to the upside, we still have resistance at 176 and the previous closing high at 179, and above that, it does look like we're going to the next price target right around 188. So as long as Apple has the bull trend, we do have a confirmed price target at 188. So continue to watch that price target as long as we're staying above this critical support right around 167. On the financial sector, we were up 1.26% today, and this is definitely very bullish sector rotation. Remember, I told you the tech sector got routed today, but we see a lot of that money flowing into the financial sector, and we still have a gap to close above, which will also give us a bullish breakout look. We're very close to having the full bull trend, and this will be very bullish for the S&P 500 if we see the financials going back into a bull market. On the industrials, we are flat on the day, and we're back above all the moving averages, and we're very close to having a full bull trend. If the industrials can go back into a bull market with the financials, that will be very bullish for the S&P 500. The healthcare sector was up 0.59% today and continues to look extremely bullish. We're getting very close to that price target, and we still have the bullish breakout look with the strong bull trend. So there's no reason to believe that the healthcare sector can't continue to go higher from here. On the energy sector, we were up 0.63% today, and we still see price action getting rejected at the moving averages, so we could still be generating a bearish trend. Remember, the energy sector is not a lot of weight in the S&P 500, so we could see energy going lower and the S&P 500 going higher. So jumping back over to the S&P 500, while we're still in a full bull trend and price action is still above critical support, you need to stay objective and you need to stay on the bull. This is definitely going to be a whipsawing market full of bear traps and bull traps alike, but you have to remember it's still a macro level bull market and we have the bull trend on all of the charts. Remember that first and foremost, the weekly chart is the strongest and we have a very strong weekly bull trend, and right now we also have the strong daily bull trend. So all of the trends are bullish and price action still above critical support, and we already know our exit strategy if we start to see price action breaking down and we lose the bull trend. So when you have a proper trading plan and you know what to do no matter what happens in the price action, you're always going to come out on top. That doesn't mean you're going to win every day, so don't have unrealistic expectations. Just continue to stay objective, continue to formulate a trading plan and follow it closely. And if you're still not being profitable in this market, you need to take a step back and you need to figure out what you're doing wrong and you need to fix it. Remember that I'm here to help you and I want to see you be successful. That's why I constantly preach to stay objective and follow price action and trend. If you're getting subjective and you're starting to get scared and fearful and that's causing you to have biases in your trading, you're going to continue to lose trades and you're more than likely not going to understand why because you're going with your gut feeling and you continue to be wrong. If you follow what the chart says, yes, you're going to make trades that don't always feel good, but you're eventually going to start seeing that those are usually your best trades that make the most amount of money. So stay objective and continue to learn what you're doing wrong and continue to improve. Also, don't forget that I do have bank trade alerts that only trades the ETF TQQQ and sends you all of your buy and sell alerts via email and text message. I'm currently running that Black Friday deal for 67% off your first month, but now is the last day to claim that deal. After today, the Black Friday deal expires, so if you still haven't tried bank trade alerts and you've been wanting to try it out, now is the best time to become a bank member. You can find out how to get that discount code and how to join bank trade alerts by clicking on the link in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.